Here's a quick rundown of today's budget with special focus on employers, small businesses and landlords. So the employer's national insurance rate has gone up whilst the threshold from which you start paying it has come down. So that means on average, if you're paying your staff £30,000 salary a year, you're going to end up paying around about £900 more in employers' NI than you did last year. Employment allowance at the same time has increased to partially offset this. This allowance is what the government pays for you on behalf of your employer's NI. So you don't pay employer's NI provided you meet certain eligibility criteria of £5,000, and now that's increased to 10.5. The national minimum wage has also increased for both the 21-year-olds and above, 18 to 20-year-olds as well. The 16 to 18-year-old rate is yet to be announced. So if you're employing a 22-year-old on a national minimum wage, you're going to end up paying around £2,500 more to employ that same individual from April onwards. And that's a combination of increased salary, increased employers' NI, and increased pension costs. The capital gains tax threshold is going to increase from 20 to 24% for higher rate taxpayers and 10 to 18% for basic rate taxpayers. And this will affect everything such as second properties, crypto assets, and investments and shares. Anything housed within an ISA is exempt and continues to be so. Landlords can expect an increase in stamp duties for their second property from 3 to 5%. So if you're buying a 250 grand house, that's going to cost you an additional 5 grand to buy it. The furnished holiday letting changes that were announced previously are set to stick. So that means that any furnished holiday lets, such as Airbnb or cottages that you rent out, serviced accommodation, the mortgage interest will no longer be an allowable expense. You can't claim the enhanced capital allowances for furnished holiday lets. You can instead claim a like-for-like replacement of domestic goods. And when you sell your furnished holiday let, you'll no longer qualify for the enhanced business assets disposal relief. So if for example, you sold your holiday let for a 50 grand profit, this means an additional 4 grand of tax at least. There's going to be 20% VAT on school fees. So if you're paying 5 grand a term on school fees, you can expect to pay an extra 3 grand throughout the year. For business assets, currently, if you dispose of them, you will enjoy only a 10% capital gains tax rate. This is going to increase to 14% from April 25, and it's going to increase to 18% from April 26. So let's say you sold your business for £100,000, then from April 25, you'll have to pay an extra 4 grand of tax, and from 26, you're going to have to pay an extra 8 grand of tax. The other things that might be worthy of note is if you owe HMRC anything, the interest rate that they charge you is going to increase from by 1.5% to 4%. They are also clamping down on any IR35 avoidance. So if you are using a personal service company or an umbrella company upon which you charge a day rate, which means that no tax or NI is deducted at source, then you might need to just review your practices and make sure that you are definitely outside the scope of IR35. From April 25 also, double cab pickup trucks such as Ford Rangers or Navaros are going to be treated as cars as opposed to commercial vehicles, which means increased level of tax on the employee and also much less capital allowances for the business are allowed. That's a quick whistle-stop tour of the budget from today.